Hi friends, let's take a look at Link. So the current price there is 444.52. Close down that tab. We'll look at the Bitcoin prices first, then we'll take a look at the dollar one. Actually, let's just do a quick spoiler alert then, shall we? So that's what we're looking at on Bitcoin. That's what we're looking at on dollar. That's the weekly. That's why it looks so good. There, back to the daily. That's what we're looking like on the dollar, and that's what we're looking like on Bitcoin. So let's close that down. Now, what was the benefit to us in looking at that on the week versus the daily, just as a starting point, I suppose? I only really did that because I left off the Ethereum video on the weekly, but it's good to see, you know, it's in terms of just being able to just measure up exactly where we've come to in terms of where we are now and where we've been. So we're kind of in and around the 382 just now, and as you can see, the wick took us right up towards that 618. So you know, you've got these are two different Fibonacci retracements as it happens, but you've got these two areas which are important. The 618, we're down here at the 50% retracement area from there. So you know, that's all kind of profit taking targets. That's all very good for us in the recent past, having been able to know that these prices were incoming at that 47,000 area and say, well, that was a profit taking target, 40,000 or so, and be content with that. So we're back here at the 50% then, and then drop down here below the 382 and below then the 50%. Is that the 236? Yeah, below the 236 of this overall Fibonacci retracement. So the 236 currently being important, as you can see in this wick, and then we came back up. 236 being important because if we go below this on the big all-time lows to highs prices, the 236 here, then you're looking at a valid Fibonacci retracement. You can look towards these lower targets yet again. So it was a sort of an achievement in and of itself, a big one, a good one, having made this recent price action rise up here above the 236, invalidating this Fibonacci retracement on the bigger scale and putting us in a position where we can look back up towards, you know, the top end of it there at 56,000 and thinking that that's within the realms of reason. So we can relegate that out of the picture for now, so long as we remain above this line, this magnolia line where the wick comes in at here on this chart here. So we're looking instead at these other two Fibonacci's, and you've got essentially the 236. If we want to get up above there and really, you know, challenge up to be doing that bigger time frame targets of the 56, then we want to see the prices go up above 49,000 here at this 236 level. And I'm just looking at this in terms of Fibonacci's just now, because as it happens, they do tie in together with the levels. You know, looking to the left here, roughly where you could say that where if you're achieving one of these Fibonacci's, for instance, this one here at 618 at 47,443, and actually in this golden pocket area of the retrace and establishing yourselves there and above, then you're going up above all of this chunk here of potential resistance in doing so. But like, let's looking over to the left here, you can see that currently where the prices are just now at that in about this 45 where the prices have been today, sorry, so to speak, the tops of this candle here in this area is resistance, and all the way down to where the prices are just now as well would be potentially the support area here just in this chunk. So the sort of crucial two zones for me right now in terms of the prices, in terms of the immediacy following publishing this video, I suppose, are the 44,500 level and remaining getting it back above the 45,000 level if I'm going to be looking towards the upside. Elsewise, then we'll be looking back down towards this 43,000 and 42,000 again. So that's the sort of what we're looking at there in terms of that. In terms of the movement and where we've been recently, then, you know, we had this uptake in volume, which was good to see. We've come through the 50 simple moving average, which is good. You know, this overall upward trend in terms, maybe back on the weekly would be easier to see this again, continues where we have this high here, this high here, this high here, this low here, this low here, this low here, you know, and overall, while we could still see the prices swing around anywhere in this area, it's good to see that the sort of the plunge protection team came in there at the right times and a good time anyhow to stop this sort of overall upward trend versus Bitcoin from stopping. So that's all kind of good to see. We're up way above the 21 here on the weekly, so that's also what was operating recently as support, you could say. And so then let's just kind of bear those figures in mind. You know, we could go all the way back down, say as far as this 236 down here at 38,000, and remain fairly sort of bullishly happy and content with the way that things are panning out in the macro. should we go below there, then I'd be quite worried at the 36,000 level again about coming back down to where we have been and undoing all of this move. So that would be the sort of the alert sort of system. And I don't know if any of you would actually be, you know, sensible, so in inverted commas, enough to take profit at any of these in between levels. Let me know down in the comment below if you trade sort of in the long term or the short term with Link. Now I'm going to go over to the dollar prices and take a look, see at what's been going on. And we had on here triangles and whatnot, and looked at breakouts and everything in the past recently. So like, comment, subscribe, all that jazz. If you're just new to the channel, then subscribe and all that. We do daily Link videos, so thanks very much for tuning in again today. Found ourselves go up above the 50 simple moving average and all the way up towards the 50% retrace line here at $3.30. So that's really great, and that was a good profit taking target. In fact, the wick even went on up to $3.50. So the very greedy among us there could have potentially cashed out of that area. And then you see the prices have come back down to where the 50 simple moving average is here, this red dotted line, and at that $3 area. And of course, if we look at the current price and see that it's $3.06, we know we always knew on the way up here, we knew $3 would be important. On the way up here as high as 350, we probably still would have been thinking, hey, $3 is like, I'm still really happy to be above $3, and that's a clear sort of area as in terms of pivot point. When you saw the prices come back down, they got down quite close to sort of 618 here in terms of the, you know, the downward side Fibonacci retracement that they had looking at previously. So we went down to close enough again to that area. So if you were shorting it off the back of any of these moves down there, maybe that was close enough. If not though, if this $3 area doesn't hold, then we would be coming right down to that 290 again area, and where could be next? Well, we've got the 55 exponential moving average and this 144 exponential moving average and this blue horizontal line here at 283. So there's something, I suppose. And then after that, and you could still remain bullish on these targets, sorry, is 267, where you've got the 200 simple moving average there, and this 21 yellow line here, you see that's coming in just there as well, whatever the 233 exponential moving average is as well. So all three of those with this blue horizontal line at 267, and you could still remain bullish there and say like, hey, we've got this upward move happening right now. You know, is the potential for a local high, but you just have the one to make comparisons against in terms of the oscillators, in terms of the, so no divergence there to speak of. In terms of the DMI, well, sure, you've come up here and we've kind of tested off of this and you know, as this follows price action as well, you know, and as highs are made, higher lows are hoped to be made as part of that process. So, you know, that's nothing unusual there, and to be seen in terms of this, if this were to be an overall upward trend. But of course there are question marks to be had about if this is to be that or not, because, you know, in the terms of the daily, you can see the last high was up here at 380 and things like that. Or no, sorry, not the last high, just an area that we need to be breaking, you know, up here at the 375 area, in terms of looking towards this trend having turned around really fully, you know, for the weeklies to be coming back up here then to the 450 area and stuff, and you know, and all that, so for us to get those great targets in line, you know, anyway, whatever. So looking down at the 4-hour chart here, what do we have? And we were aware of the divergence. That's right, we did actually point this out, didn't we? We were saying that there was divergence here in the MACD, right? And there was divergence here on the DMI as well, right? Yes, there was, and on the stochastics, yes. And well, that's played out just now. That's playing out just fine. So that was a good profit-taking target. Anything really up here since the point at which we were able to say, look, this is potential. If this is happening, if you see the prices slink down below, then, you know, as soon as the prices are coming down and getting in and into sort of into the question mark territory, then it was a wise enough moment to take profit, sure, on that. And then of course when we came down to 21 in the 4-hour, that would have been a wise enough place as well if you were shorting it from up here at these highs down to this area to also take profit. I'm not financial advisor, that's financial advice. Will we see this continue on though, this trend, or is this the hallmarks of it beginning to end? Well, it's still too early to say overall, in the sense that we're still making higher highs, higher lows. 21's in there. Things are still looking overall quite healthy, and like we saw on the weekly time frame, that's also the case. And we're at this point here where it's like, well, we've seen this happen quite a lot of times if you've been watching over the channel recently, you know, where you get this question, is like, is this going to come down here, and are we going to see these two cross over and everything else like that happen, and let's get a period of downward price action, or is this actually going to just turn around at this point here and go towards the upside and then sustain this ADX up above? Are we going to see that or not? I mean, that's so we'll have to keep our eye out for that. Seeing these things collapse down the way is obviously obviously going to be a sign of something. Seeing the prices go down below 290 like we spoke about, and then 280 like we spoke about, is a sign of something. Could then see these other areas. And then in terms of the the 4-hour time frame, you would be putting in lower lows. Any high then thereafter in terms of 4-hour time frame, you suppose you'd be looking for to try and get back up to this area at 330 or so, but then at least as opposed to $3 again, to avoid having sort of shorter term head and shouldersy type time frames or turnaround type things happening on the chart here and whatnot as well. So there's sort of your two cases. Maybe I've intermeshed them and layered them up too much, might have spoke a bit too quickly. Certainly had this chart crushed up way too much throughout the video. Apologise for that. You know, volume dropping off here a wee bit, but that's all kind of fine, you know, in terms of this. Yeah, so let's just see how things play out. You know, there's fairly low risk management moves if you've not got position right now. There's fairly decent targets if you do have a position in place right now to be taking targets at and that sort of thing. And of course, there's risk management targets all over the shop there that we discussed, all those sort of numbers we discussed. So yeah, you know, thanks so much for tuning in. Really appreciate it. Sorry for being a little bit scatterbrained in this episode. I feel like I might have. Maybe when I look back at it, I'll say it looked all perfect, but I doubt it. Like, comment, subscribe. Really massively appreciate it if people actually hit the like button in the comments, go in the comments and just say hello or whatever. Massive appreciation for that. And of course, subscribe for daily videos. I do Bitcoin, Ethereum, and Tezos as well. So I'm going on to do Tezos just now. Thanks very much. I'll catch you later.